Okay, I think we can start. First of all, welcome everyone to this subject, Fintech Theory and Practice. I know that most of the students are from the major of financial engineering, and definitely you are warmly welcome to enroll into this subject. The first question I have for you is that quite a lot of students have learned finance, right? And if I ask you to use one word or two words to talk about, to define finance, do you know what is the finance? So you can ask yourself, what is the finance, right? And here I have my own definition. Finance is about money flow. Okay. So when we talk about money flow, and then you may have the second question, what do I mean by money flow? Money flow from here, we have borrowers. And we have the flow from lenders. Borrowers receive money from lenders. And then we have investees. And the money flow from investors to investees. So this is money flow. And definitely, we have some format about finance. In that case, you have bonds, stocks, and loans. And they are regarded as some format of finance, right? So this is the finance. So just now we talked about the definition of finance. Give you two words. That is money flow. Money flow from lenders to borrowers, and also investors to investees. And we have some kinds of formats, such as bonds, loans, and also stocks, right? And then the second question I have for you is, what do you think about the key determinant of finance? How can we say, oh, this country or this market, you are going to have well-developed financial market? So what are the determinants of finance? So what determines finance? So you can ask yourself, maybe you can raise many factors. There's one very important factor I would like to talk about. This is trust. Trust is the key determinant of finance. Why? Because finance can be regarded as a contract. The contract between borrowers and the lenders, investees and the investors. So a pure contract between these two counterparties. So it's just a financial document between these two parties. And how we can have more contracts signed, the key determinant is trust. If lenders do not trust the borrowers, if investors do not trust investees, there's no point. And lenders will sign the contract with borrowers. Investors, no point, will sign the contract with investees. So for lenders or investors, when they sign the contract, and then you are going to have the exact formats, and that are regarded as bonds, stocks, loans, or insurance contracts, right? So the key reason to form this contract is trust. Then I have another question. Do you trust me? The first time I give you the lecture, we haven't formed the trust between each other, right? So the next question, how can we form the trust between these two parties? Here I have one key element. This element is called information. Without information, it's hard to form the trust. If you don't know each other, how can you trust each other? So it's very important for lenders to acquire information from borrowers, investors to acquire information from investees, the company. The next question is, how can we have information? What contributes to the acquisition of more information? The answer is data. You need to have more data. You are going to track information from data, all kinds of data. Without data, you do not know borrower's information. Without data, you do not know the company you are going to invest. So if we close the loop, what determines finance? The key part is data. So this is decide the success of the financial market. So this is finance. Okay. The next thing I would like to talk about is traditional finance. Traditional finance relies on conventional data. So what do we mean by conventional data? For a listed company, we are talking about a financial statement. And for an unlisted company, if they are going to apply for loans from the banks, we are talking about their invoice, tax invoice, and also other bank statement. We are talking about an individual's income pay slip. Okay, relative to conventional data, we have another type of data, and this type of data called alternative data. Alternative data includes news articles, mobile messages, a person's social network, and also all kinds of photos. So you could have news articles, you could have newspapers, you could have photos, and this data has another name, unstructured data. So nowadays, over the past 10 years, 20 years, people try to extract more information from alternative data. And for this kind of application, we give a name. This is called Fintech. So now you understand where we come from, where Fintech come from, right? What is finance? And what is the key determinant of finance? And what is traditional, conventional finance? And what is new finance in this scenario? This is called Fintech. So for next 40 weeks, and Professor Dan and I, we are going to give you the lecture on Fintech Theory and Practice. So here is the definition. I'm not going to repeat again. And I would like to show you a graph. And this graph shows you global investment in Fintech projects every year since 2010. From 2010 to 2022, almost 30 years. What do you observe? I'm sure that a substantial change, a substantial increase, and globally, investment in fintech project increased from 9 billion US dollar in 2010 to 200 billion US dollar in 2022. So increased by almost 22nd time, increased substantially. So the market is booming. When the market is booming, it means that we have more capital invested in this part. Both capital and also human capital. So in this area, we need more talents. We need more people, practitioners, and attention. So that is why today, and you are in this room, we all together to study fintech because this area is booming. And then next, I'm going to show you the examples. And when we talk about the investment in fintech project, what do we mean by investment? Investment includes merger acquisition, pre-IPO financing, reverse merger acquisition. Here, at least the top 10 fintech investment in 2021. Top 10 globally. The first one is a case of acquisition, merger acquisition. The name of the company is called Refinitiv. Refinitiv, I'm not sure whether you have heard about this company, a British company. Probably you have used its data products from other subjects. Have you ever used data stream? Have you ever used IBS, word scope, and Thomson Reuters mutual fund holding data, and also Refinitiv ESG ratings? So what is this company? And this company actually is a data vendor. Data vendor. They sell data sets around the world. And this data vendor company was acquired by London Stock Exchange in 2021. So London Stock Exchange is a conventional financial company. They acquire data. Refinitiv is a fintech company. So this is a case for fintech investment. How much do they pay? London Stock Exchange paid almost 15 billion US dollar, a lot of money. You can also check the second example. The example is in Denmark. It's a Danish company. The name of the company called Net. It's an e-payment company, similar to Alipay. And for this company, it was acquired by another European e-payment company from Italy. And this company is called Nexi, N-E-X-I. Why? Because Nexi, this Italian e-payment company, wants to become the largest e-payment company in Europe. E-payment also belongs to fintech business. You also have other examples later. We will talk about another example, SOFI. The full name is called Social Finance. And I will give you the product and ask you to read it. Okay. They are the examples around the world. If I ask you a question, what do you think about the fintech company in China? Could you give me some example about the largest fintech companies in China? Do you have some examples? Alipay belongs to Ant Group. WeBank, Ping An, right? We have many fintech companies located in Shenzhen, Shanghai, Beijing, okay, and also in Chengdu. So now we talk about Ant Group, Alipay. And if you want to understand fintech, you just need to understand all services provided by Alipay, Ant Group. Then you can know always fintech business. And generally speaking, fintech services can be classified into several categories: payment, financing, asset management, and also other fintechs. And for fintech, for payment, I'm sure that you use it every day. And definitely you could be a fan of e-payment. And for this one, the e-payment platform is called Alipay, and launched in 2003 or 2004. At that moment, originated from Taobao, and make the transaction, online transaction, much easier. Only need to scan the barcode. You don't need to use cash. You get used to it, right? The second type of service is called financing. So what do I mean by financing? Financing means that money flow from lenders to borrowers. So this is called financing. And people or small business, they are going to borrow money from a bank, from an e-bank, from a financial institution or financial company. This is called financing, okay? Examples. Huabei is regarded as an electronic credit card platform. I'm not sure whether you are using it or not. If you have a lot of cash, then you don't have to borrow from the credit card, like e-credit card, like Huawei. This is for individuals and also the personal consumer credit. And also, for small business, we know that if you do shopping in Taobao there are so many small shops. They are called retailers, online retailers, or also called online merchants. For those online retailers or merchants, there are hundreds of millions of online merchants located in Taobao. And if you want to set up business in Taobao, what do you need? You need money to buy some products and sell those products to your customers. Then you will have the question, where do you get money? You can get money or borrow money from an electronic bank. This electronic bank is called MyBank. 网上银行 is regarded as the first electronic bank in China. They do not have any physical branches. They only have a financial cloud, the connected computer together. They have data, they have the platform. They issue loans to small business in Taobao and Tianmao. And also, most important thing, there's one determinant to decide whether the bank or Ant Group, they are going to provide loans to individuals or business. It depends on credit score, and this credit score provided by Ant Group is called 芝麻信用. I'm sure that you are using. This is regarded as the first, the market private companies credit score in China, and way earlier than the credit score from the central bank China, right? 人民银行. Okay, this is financing. Second type of service. What about the other services? We also have investment. If you have spare money, cash in your account, you can also invest in cash fund, money fund, and also equity fund. So this platform is called 余额宝. 余额宝 at the beginning, when it was launched, they offer its customer a deposit interest rate 6%. Do you remember at that moment, what was the interest rate in bank? Only 3%. So for Yuebao's customers, they will think, deposit money in Yuebao 6%, deposit money in bank 3%, and then why not deposit money in Yuebao 6%, right? So all money at that moment flow into Yuebao, but later on by regulation, the Yuebao's interest rate, offered interest rate decline. But that is regarding the service from investors to investees, this platform. The last one I'm going to talk about, the service is called 相互保. 相互保 is more like an insure-type platform. Means that everyone in this room deposit 100 yuan today. We have, for example, 100 students. So how much money we have in this pool? 10,000 Chinese yuan. So if one student tomorrow is sick and have some hospital expense, 2,000, and then in that case, he or she is able to claim 2,000 or 1,000 from this money pool. These services is actually provided by 相互保, mutual aid platform. But unfortunately, this platform has some regulatory issues, concerns. It was closed by the end of 2021. So no longer we have 相互保. So this is the case for our group. So if you want to understand fintech, you can understand this part. Next, I'm going to introduce myself. This is my education background, my academic experience, research interest, focus on fintech and sustainable finance. And this is my website and also my office and email. I'm going to teach from week 1 to week 7. If you later you get tired of my teaching, luckily you have Professor Dan Li. So I would like to invite Professor Dan Li to introduce herself.
Okay. Thanks for Professor Bo Hui. Nice to see everyone. So finally, it's another new year. I'm glad to see all the new faces in this classroom. So as Professor Zhang mentioned, I'm going to co-teach the course with him. I'm going to teach you from the second half, so week 8 until 14. And here is my information. So my background information. So I have 2 degrees in economics and 1 degree in finance. And then I had a previous experience at the University of Hong Kong. And here's my research experience. It's more about the finance, market microstructure, high frequency trading. So if you're interested to discuss any of them, welcome to drop by my office or just schedule an appointment or email. Then here's my detailed information. It's my website and my office and also my email. So I will give you this information again when this comes. So next, I'll let Professor Zhang.
Professor, maybe you can also talk about more details about the content you are going to cover from week 8 and week 14. I will talk about the first 7 weeks later.
Okay, so here is what we are going to cover in this semester. So you can see the second half from week 8 to 14 will be my part, and each week, so my content actually more focused on the industry practice. So for each week, I will talk about a specific application, like the application of technology in each of these finance sector. For example, like week 8, I talk about a payment. So I talk about the current electronic version payment, and then this new blockchain and distributed ledger technology-based payment application in domestic and also the international, like cross-border payment and also the supply chain payments. And the second week, alternative finance. So we are focused on this new form of this platform or marketplace based on the financing. So Professor John talked about just two different kinds of financing tools, right? You have this debt, and you also have the equity-based financing. So alternative financing also we talk about the application in both. So there's lots of these people who has extra funds, and there's also people who's looking for capital they can meet at the marketplace, and through this debt financing or equity financing method, they can use a fund for investment. So the following week, I talk about robo-advising and personal finance. So robo-advising was started around 2008 after financial crisis. So this is a new way for ordinary people like you and me to join a specialized personal finance alliance. And also the specific target and also the way it works is a little different from the traditional wealth management industry. We'll talk more about that. And then the following week, and we also know there was also this the application technology also occurs in this investment industry, right? We also have finance students in this classroom. So we're going to talk about this particular application, like what kind of this machine learning method application in investment strategy. How can this help us to improve this investment strategy and performance and such and such. And then the following 2 weeks, and when we talk about the insurance, application insurance, including this enrollment, underwriting, and also the reimbursement. So for insurance is something we don't really come across even in the business school. I'm going to introduce that in this week. And the last one, since fintech is still a relatively new industry, it's a combination of technology and also finance. So it's a unique feature and characteristics require new regulation, and so there's a lot of things that are going on. So for this week, I will talk about this new recent issue domestically or internationally that arise in this regulation space. So eventually, this course we don't really have our final exam, so we were going to have a major final project instead. So the last week will be the final project. So we're gonna have a just team-based presentation. So for you, it's a time for you to shine at the last week. And in addition, I just want to mention, normally, traditionally, in the past years, we also try to get somebody who is in this practitioners come over to talk about this fintech practice in China. So we're going to do the same this year. I will give you the details later on. So thanks, Professor Zhang.
Okay, thank you. Just now, Professor Dan talked about the third part. And I will also briefly mention the first 7 weeks. And for this week and the next week, we will focus on consumer credit market, talk about impersonal or individual loans. As everyone in this room, if later on you are going to borrow money from a financial institution, and then how interest rate is determined, and what is the concern from a bank or financial institution, how alternative data, big data play a role in this market. And also for week 3 and week 4, we are going to introduce alternative data into equity market. We will quickly review something you learned from equity investment in the past. And then we are going to show you the examples such as online sales data, and also the express delivery data, mobile data, as well as the search engine data. We will have a swap from the week 4 and week 5. And then week 5, we will talk about the textual analysis, how we are going to bring textual analysis into the equity market to make money. And also week 6, we will introduce the cool stuff, that is image analysis, image analytics, and to process photos from satellite. And we are going to bring satellite data, the image data, into active market. And then in week 7, we will talk about cryptocurrency, blockchain, and also ICOs, and Bitcoins, and talk about the application of this blockchain in the real market, and also trying to back the digital currencies. So this is all my content. The good thing for this subject is like you do not have a final exam. Mid-session exam, you can take break while other students have mid-session and final exam. But it doesn't mean that you will have a lesser workload. Actually, the workload is quite heavy. So you are going to have an assignment every week. You are going to have an assignment starting from this week. So how you can finish this assignment? We have tutorials, and Eve is going to give you our tutor. Eve, could you please stand up? Yeah. Let's give some applause. So, and give you the tutorials, and starting from this week, okay? And so, is the time determined? Okay. So I really encourage you guys to attend tutorial, and especially at the beginning, you have no idea how you are going to work on the assignment. So every week we have the requirement to submit assignment no more than 2 pages, Times New Roman, and font size is 12 because sometimes if we don't set the page limit, and some students in the past many years ago they submit the assignment with 20 or 30 pages. And give pressure to too much other students. So we set a limit 2 pages and make everyone's life easier. And then, so for the first 7 weeks, each week you are going to have an assignment. And then the deadline is 2 weeks. Today is, for example, it's a Thursday, and 2 weeks later, and then you can submit your assignment. So rolling every 2 weeks. And 3 reports will be submitted in the second half of this semester, and also group project presentation in the last week. Lecture in total, two sessions, each session 1 hour 20 minutes, 1 hour tutorial. So this is the structure. Here, I would like to give you the emphasis on the class participation. So everyone enrolled in this subject are required to attend, to attend lecture every week. So we hope that we can mark the attendance. I'm not sure, use some more efficient method, or maybe we can use the randomly draw approach and to mark the assignment, the attendance. So if it's required, how you can get this 10%. So we have a rule. So what is the rule? So you should not miss it for more than 2 times. If you miss more than 2 lectures, and then you will receive the attendance. This participation mark 0, less than 2 and 10%. So this is the first requirement. The second requirement is fail and no fail. So if you miss the lectures for more than 4 times, and then you are going to receive the fail. No matter what you finish the assignment or project or not. So you are required for the attendance. Okay? And also, the third rule is that no delay. You are required to come into the lectures on time. First one, second one, and the third one is no late than 5 minutes every lecture. Okay. So there are the 3 rules imposed in this subject, in this course. Okay? So this is the whole content. Do you have any questions? If no questions, we are going to move the content.
That for the group project, how many grades do we have?
Oh, we will check with Professor Dan Lee, and so you don't have to worry. At least for the first 7 weeks, you don't have to form the group. You only need to form the group probably in the later weeks. So at this moment, all the assignment, individual assignment. So everyone needs to submit the assignment. Okay. And also you may have a question, how comes for this course we don't have mid-session exam or final exam? The reason is that if I give you mid-session exam or final exam, it's hard to test whether you are able to work on those fintech product. The main idea is that we train our students to make sure that you can play with the data. And you will be the master of data, play with data, and generate some crazy ideas, and to be a good data cooker. So our point is not to force you to write down the definition of fintech or the definition of lending, the definition of finance. This is not the point. The main idea is that give you a data set, you know how to play the data, how to extract the useful information from data. So this is real good when you work in the industry, once you study in the postgraduate and also PhD programs, and you know how to handle data. This is the major expectation. So all the definition, theory are not required. The main idea is to generate crazy ideas, innovative ideas, and by studying this subject, as long as you know how to cook data, so any programming softwares could be used, and any method, regression method, can be used. You could use OLS, logic regression, doesn't matter. So as long as you get something called nothing is perfect, nothing is completely correct, nothing is completely correct. You just try your best to get close to the truth. The truth is information. From data to truth, there's a long journey, but we have to touch data. You see the data. So all the data I gave to you is a real data. They are not cooked data. They are just real data. So you need to play data. Okay. Consumer credit market. We are going to talk about it. And maybe we have some students have no idea about consumer credit market. Our story starts from household. When we talk about household, we refer to a family. Family includes parents plus children. Okay? Parents include plus children. Okay? They form a family. So in that case, I will ask you, what properties they have in the family? They have apartment. They have a house, right? In that case, the family may have apartment or house. And also, the family may have cars. And then they have their children to study at the universities like CUHK Shenzhen. So you have the tuition expenses. And also you have a daily consumption. So you can see that, and we have family, apartment, house, cars, and the tuition expense, and the daily consumption. Let's assume a scenario. The scenario is that the family's income or wealth is less than consumption. What should this family do? If it's wealth or income less than its consumption, what should this family do? They should borrow. They have to borrow money from a bank, right? Borrow money from a bank. So if they borrow money from bank, for example, if they borrow money from bank to buy apartment, what is the name of this loan? This is called mortgage. From that, right? Mortgage. And if they borrow money to buy a car, so this is called auto loan. And if they borrow money to pay tuition expense, so this is called student loans. And if they borrow money to support their daily consumption, this could be considered as part A, or called the credit card loans. Okay? So I give you the examples for several types of loans inside the family: individuals, personal loans, mortgage, auto loans, student loans, credit cards. The second question we have is, what is the share, what is the proportion of the different types of loans in a typical family in US or in China? Do we have a rough idea? Here, we first check US case, and we collect the statistics, some numbers. And according to information, a report, the second quarter 2022, the total family loan accounting for almost 16.15 trillion. So you may have a question how large it is. We divide this number by the size of population in the US. So what is the amount for each individual person? For each capita, the total money American last year they borrowed is roughly about 46,000. Is converted into Chinese yuan is roughly about 350,000 RMB. It's quite a lot, quite heavy. And the second question we ask, American family, and what is the largest share of the loan in a family? What is the second largest share of the loan in the family? What is the third largest share of loan in the family? Here we have the answer. Mortgage takes a share 71%. So it means like if American borrow $100 from the bank, amount is $100, $71 actually is for house, apartment, and roughly about $10 for student loan. So you don't have to complain like the tuition is expensive at this university. So actually the US university, they charge the family with a much higher tuition fees. So tuition loan is regarded as the second largest loan share in the American family. The third largest share is auto loan style car. Fourth is credit card, only 5%. This is the US family. Then we bring this question to China. How do you think about the Chinese consumer credit market? Do you think it increase, decrease, or keeps constant? And what is the largest loan in Chinese consumer credit market? So let me show you the answer. We calculate a number. So what is this number? We calculate the country's total family loans, household debt. We divide this number by the country's GDP. And the developed countries, emerging markets, for most developed countries, household debt relative to GDP is roughly about 60%. But for most emerging markets, it's roughly about 25%. So here you can see that from 1990 to 2019, over the past 30 years, US, European, and other developing countries, the developed countries, their household debt increased substantially, especially before global financial crisis. After global financial crisis, the loan dropped. And there's one trend observed from one country, that is China. Chinese household debt increased from 30%, 23 or 24% in 2007. And this number increased to almost 60% in 2019, substantially. So one answer we get from this figure is that Chinese household, Chinese families over the past 15 years have a heavy burden from the credit market. Why? Because we borrow more money from banks. Why did we borrow more money from banks? Why did we borrow more money from banks? Do you know? The one major reason is housing price. So if you decompose this number into different types of loans, you have red color, orange color, green color, blue color. Blue color has a sharp increase. So what is this loan? This is a mortgage. So people complain high housing price in Shenzhen, Shanghai, Beijing, Guangzhou, the first tier cities in China. And the substantial increase in housing price surpassed the substantial increase in mortgage in Chinese family. And if you check the green part, this is the loan for personal business. For example, if you set up a Starbucks shop, set up a Lexin shop, let's set up a pancake shop, you borrow money from the bank for your personal business. And this is a personal business loans. This fraction did not change so much. Another part, the third type of loan for Chinese family increase is called credit cards. This color, orange color, also increased. Okay, so here I try to give you a brief overview about the consumer credit market in US and in China. You pretty much have something, basic knowledge about these two markets, right? Let me ask you. From a bank's perspective, like a bank lend money to borrowers, households. And from a bank's perspective, so what is the major concern when they lend money out? What is the concern? Does this bank have any concern? The answer would be, of course, right? The bank does have the concern. So what is this concern? The concern is that there's no guarantee that 1 year later, the bank will receive money back, such as principal and interest. You are not sure principal and interest will be repaid by these families. So this concern, we give a name. This risk, we give a name. The first name is called default. So what is meaning? You can check the dictionary. Meaning that the borrowers, individual borrowers or business borrowers, they would not be able to repay money back to the bank. This is default. Relative to default, you have another name. It's called delinquency. Default means that they were not able to repay. What about delinquency? Delinquency means that they delay their payment. How many days do they delay? You could delay it by 10 days, 30 days, 90 days. Conventionally, in bank's standard, we normally use 90 days as a conventional statistic. So when a loan has a delinquency more than 90 days, in that case, it is equal to default. The chance to repay would go zero. So sometimes we are going to call it default. Sometimes we will call it delinquency more than 90 days. Next, I'm going to ask you a question. The first question, what do you think about delinquency rate 90 days in the US? The second question is delinquency rate in China. So what is the difference between US versus China? What is the difference between US and China? If we focus on credit card, for example, what is your expected delinquency rate in the US? What is your expected delinquency rate in China? Is that rate in US higher than China or lower than China? We have no idea, right? Okay. Let me show you the answer. Delinquency is a prevalent phenomenon. In US market, the credit card delinquency rate more than 90 days is roughly about 10%. And in China, this rate is roughly about 2%. Okay, I can show you a figure. This figure shows you several household loans delinquency rate. Auto loans, credit card, student loans, and others. If you check this blue line, you can see that in 2003 first quarter, this number is roughly about 8.9%, and then increased substantially right after global financial crisis, and then declined, and then increased again in the first quarter 2020. Why? Because pandemic. And this is the case for US. And then you could also check China. The green line, I show you the credit card default rate. And 2017, 1.72%. 2018, 1.67%. 2019, 1.6%. 2020, 2.14% increased. So what is the conclusion you draw from the third question? Delinquency rate of credit card in the US is higher than that in China, right? Okay. Do you think it's a good thing or bad thing? For China to have a lower delinquency rate or default rate, do you think it's a good thing or bad thing? Somebody may say, oh, it's good to have a lower default. Somebody say, no idea. Or maybe good, bad. Do you know why? How comes in the US the delinquency rate is higher than that in China? So what is the reason? Do you know? So what is the reason? in the US market, let's assume for any market, you have two types of borrowers. One is risky borrowers. The other one is less risky borrowers. So how comes in US the credit card delinquency rate is so high, 10%? The reason is that American banks, American financial institutions lend money to both risky and less risky borrowers. What about in China? The Chinese financial institution, if they want to have a low delinquency rate, what did they do? They only lend money to less risky borrowers. This is China. And this is US. So what does it mean? Although in Chinese market you have a low delinquency rate, the main reason is that Chinese bank only lend money, or majority speaking, they lend money to less risky borrowers to achieve such a low delinquency rate. On the surface, it looks it's good to have a low delinquency rate. Actually, if you think about these numbers in details, the main reason is that you have some people not taken care by the banks. Somebody who could not borrow money from banks in China. This issue, this concern is called financial inclusion. Especially people from rural areas, they were not able to get money. Okay? Next. Here we show you that actually it's very important to know, to understand delinquency rate, default rate. Next question we have, do you know how can we determine a borrower's delinquency rate or default likelihood? What are the main determinants? Do you know? What determines a borrower's delinquency? Income. Income is very important, right? So we have one determinant. This is called income. What about the others? After you borrow money, the more money you consume, are you going to have a lower or a higher likelihood of default? So you have another factor called consumption. And also, it depends on how much you borrow. Debt comes interest rate. Okay, let's repeat. So we have income minus consumption plus debt times interest rate. We have a very simple formula, and this formula is called financial margin. Financial margin measure the likelihood a household, an individual, whether it's able to repay money back to the bank. And we use this formula to make the judgment. And this method, we give a name. This is called non-parametric credit risk assessment approach. Non-parametric credit risk assessment approach. Then you may have the question, how come this is called the non-parametric? The reason is that there's no parameters. As long as you know the household borrower's information, you plug this number into the formula, you can get the likelihood, higher or lower. There's no parameters. So it's called non-parametric credit risk assessment method. It's a very simple method. Okay. Let's assume we have two families, two individuals, two borrowers, A and B. We know their income, consumption, debt, interest rate. Let me ask you, who has higher default risk? A or B? A or B? Can you quickly calculate? Yes, right. The answer is quite obvious. It's obvious that A's value, although the income is higher, but it's lower than B, right? So we say, by using this method, we say, okay, A has a higher risk. Let me ask you, do you think this method is perfect approach to measure a borrower's ability and also willingness to repay? Do you think this method will be able to measure ability and willingness to repay? Do you think it's possible? It seems like it could be hard, right? Why? Because this method is too simple. And you could have some family, some household, the income is zero, but lives in Nanshan, Shenzhen 1号. You know that the family has a lot of assets. So assets or real estate assets, financial assets is missing in this formula, right? And also, you have two borrowers, one in the government, the other one working in private company. Who is more risky? Definitely those working in private company. And then the income is more volatile. So you don't know the occupation, right? Another thing I would like to talk about the gender. Female and male borrowers. Next week I will show you the example, the difference between female and male borrowers. But let me ask you, if you compare male borrowers with female borrowers, who are more likely to default? Seems like you guys answer. Male borrowers we have, from all kind of analysis we have, are more likely to default. Male borrowers are more likely to default. And such information is not reflected in this formula, right? And also, you could have somebody with more family members. And also other 100 factors could determine the borrower's likelihood of default. All these factors, unfortunately, do not play a role in this formula, financial margin, right? So we are thinking, can we use some other method to improve this method? Okay? So now we are looking for other approach. And this approach will help us collect more information. To utilize this approach, we need to have a historical data set. And this data set is obtained from a bank based on the historical borrowing history from their customers over the past several years. Let's assume we have a data set, and this data set will tell us the borrower's characteristics, information, and also default information. How many borrowers we have in this data set? Let's assume 1,000. So we first we have one variable called default dummy. And from borrower 1, we denote if there's a default is equal to 1, no default is equal to 0. Let's assume we have the first borrowers is variable 0, no default. The second borrower, this variable is equal to 1, default. Third borrower, no default. And then 1,000 borrowers, default. Let's assume you have such data set for the first variable. And then we check the second variable. This is called income. And we ask each borrower's monthly salary. Borrower 1, 500 per month. And borrower 2, 1,000 per month. Borrower 3, 800 per month. Borrower 1,000, 10,000 per month, for example. And also we ask information about gender. 0 means male, 1 means female. 1, 0, 0, 1, for example. And also we have information about its assets, total amount of assets, wealth they have from their family. And then let's assume the first one is 1 million, 2 million, 0.5 million, 10 million, for example. And then we will also ask how many family members, number of family members. 3, 4, 2, 1. And also we ask whether they are married or not. Married. If married is equal to 1, no married 0, 0, 1, for example. Okay, let's assume we have such data sets with 100 variables. Next, I ask you, are you able to use an approach to estimate a borrower's default likelihood? So what is this approach? If we have this data set, how can we use this data set? Seems like we have an answer. We can run a regression, right? So the regression we use, what is dependent variable? The dependent variable is default dummy. Why? equal to A plus B1 x1 plus B2 x2 plus dot B1000 x 1000 plus epsilon. And in that case, you are going to estimate the coefficient A hat, B hat, B1 hat, B2 hat, B1000 hat. After you run the regression, you are going to have this parameter estimated. And in future, you have a new customer who wants to apply for the loan. What are you going to do? Given that you have this parameter estimated, and then you just ask him or her this 1000 variables information and fill these variables with his information. You can estimate y hat for that borrower later. If it's higher likelihood, you say no. Lower less likelihood, you say yes. This is the case. Okay? And then we give a name. This name is called parametric credit risk assessment approach. Okay? We talk about this one. Now we can learn two approaches in measuring the credit risk and the delinquency rate. Next, let me ask you a question. We are now in China, and we have so many families living in China. And China can be split into two parts, and two areas, urban areas and rural areas. Let me ask you, if you check the household or compare household between rural areas and urban areas, which party, which group are more likely to get financing, get a loan from the bank? Rural or urban? You ask this question. And then we throw this question, we conduct a survey. And this survey is not conducted by myself. Actually, it's conducted by a research center in Southwestern University of Finance Economics. And they run the survey every 2 years. They ask 3 questions. The first question is, do your family have a demand for loan? The second question is, if your family has demand for loan, are you able to successfully borrow money from the bank? The third question, if you are not able to borrow money from the bank, who you are going to borrow? They ask the 3 questions. Let's check the answers for these 3 questions. The first question, do you have money demand from the bank? First, urban household, they answer 29.8%. And the rural areas, 41.6%. 41.6%. And you can see that household from rural areas, they have a greater demand for money, right? Right? And then we ask the second question. If they have a greater demand for money from the banks, loans, are they able to successfully borrow money from the banks? Unfortunately, the success rate in household from urban area is 63.8%, and this number is only 43.6% in rural area. What does it mean? It means that household from rural area, they have a difficult time in getting money from the bank. The third question, if they are not able to get money from banks, where do they get money? In rural areas, they have to borrow money from their neighbors and their relatives. and their family members and others, right? The last question. How comes families from rural areas get such difficulties in raising funds from the bank? Why? Why banks do not lend money to families from rural areas? You know what? Here we have 3 reasons. The first reason, if you compare households from rural areas and those in urban areas, which party are riskier? Families in rural areas, their income is less stable. For example, the family from the Hebei, and once they have the flood in rural areas, and then all the farmland and flooding, and no crops, and no outcomes. In the end, the payout is 0. So the income, future income volatility is way higher for family from rural area than urban area. So risk, high risk. The second reason is information asymmetry. And for rural families, they have limited tracking information. They do not have historical payment statement, income payslip. It's hard for banks to conduct credit analysis on the family from rural areas. Huge information asymmetry. The third reason is collateral. Households from urban areas, they use their house collateral. One apartment, 6 million in urban. And however, the same apartment in rural area is way cheaper. And then the value of collateral is lower in rural areas. So these 3 reasons tell you that, give you the underdevelopment of credit market in rural areas. So that is why we need to do something. What should we do? What should we do? Tonight, I ask you to read this case. You don't have the time to read this case in lectures. You can read it by yourself. And when I see you tomorrow, I will ask the question, how comes this company, SOPI, social finance company, could be successful? What is the reason? Why? This is the most successful fintech company in the US. They focus on student loans. And it's quite representative. Read it, you only need to spend 10 to 15 minutes. Capture the key reason why the founder of this company becomes so successful. What is the reason? This is a classic example. Okay, let's stop here. I will see you tomorrow morning.